So when you look at a system that is massively leveraged like this, massively rehypothecated, it presents what ultimately could be an existential threat to some of these banks who are as silly as a mud wall trying to be naked short to this degree. So yes, that is what, in essence, when your exchange is T plus 1 day and it goes to T plus 8 weeks and they cite a shortage of trucks, well, that is a default, more or less, or at least attempt to scurry and lie about why you can't deliver. This is almost a default, not outright, but you see more and more delivery. And that's what happens. These traders, these central banks and sovereign wealth funds will smell blood in the water and they'll stand for delivery. And that's when the whole thing blows up.
The global gold market is experiencing growing pressure as central banks and institutional investors accelerate their shift from relying on paper contracts to securing physical gold, signaling a rising demand for concrete ownership amid doubts about the stability of financial instruments. According to Andy Schectman, president of Miles Franklin Precious Metals, this shift represents a fundamental change in financial behavior that hasn't been seen in decades and may indicate a wider erosion of confidence in the existing monetary system. Over 40 central banks have recently repatriated their gold from key Western vaults, such as the Bank of England and the New York Federal Reserve, locations historically seen as secure. In the United States, which was once a net exporter of gold, monthly import volumes have surged. This steady accumulation, Schectman argues, may reflect the early stages of gold's remonetization as a hedge against systemic risk. Adding to these concerns is the operational strain at the London Bullion Market Association, LBMA, where settlement times have quietly ballooned from T plus 1 days to 8 weeks. The official explanation, a shortage of trucks and logistical constraints, has raised eyebrows among market observers. Schectman and other industry insiders interpret the delays as a sign that the volume of physical gold available for delivery is falling dangerously short of what is owed on paper. The same applies to silver, where daily paper trading volumes reach as much as 10 times the available float, implying a deeply over-leveraged system. This heavy reliance on unallocated and rehypothecated contracts leaves little room for error if delivery is demanded at scale. The growing demand for physical settlement is driven largely by non-Western nations, particularly BRICS members such as China, India, and Russia, who appear to be preparing for a new financial framework. China, for example, continues to aggressively acquire gold both domestically and abroad, including from South America. In a rare public statement, the European Central Bank, ECB, recently warned that rising physical gold demand, combined with market opacity and large commercial banks' dominance, could threaten Eurozone financial stability. Schectman compares the situation to a slow-moving default, where exchanges are increasingly unable or unwilling to deliver metal on time. As global institutions demand gold in hand rather than trust in promises, the fragility of the current system is being laid bare in real time. Now, we present the clips from Andy's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
People might not feel that way, but the majority of the public will, because there's very little, pretty much the only thing that the media does is foment divisiveness and not talk about any of this stuff. And but when you see month over month of massive imports in the U.S. becoming a net importer of gold, maybe that is what we're seeing. When you see the world, 40 central banks across the globe repatriate their gold from the Bank of England and the New York Fed, which were typically the places that they kept it for access to the COMEX and the LBMA. When you see the LBMA go from T plus 1 to T plus 8 weeks, because evidently the Bank of England has a shortage of trucks and manpower to move metal around. When you see all of these things happening, the Japanese bond market blowing up, there are so many points that are pointing towards things coming to an end, that maybe this is the slow integration or the slow remonetization of gold into the system, or the slow reset happening right in front of us. So you look at the actions, everything is upside down. When you look at the actions of what the Trump administration is doing, and you could make the argument that this is happening right now. If I were looking at it, I would say it was to be expected, and we watched it happen in real time. Most people will be completely caught off guard by it, 100%.
Right. Okay. Let me ask you a couple of sort of conspiracy-esque questions. Maybe not fully conspiracy-esque, but one, how worried do we need to be about the LBMA running dry if there's so much demand to pull physical out of it?
Yeah, I mean that really, I guess you could say, is the issue. They're being bled dry. I mean, you look at it in terms of silver as an example. They have a float of 300 million ounces. That's in silver. That's the amount of silver that isn't encumbered. It's even a little bit less than that. Of the 800 million they hold, 500 supposedly belongs to SLV and other ETFs. But the 300 million float, they claim to trade 290 million a day in terms of paper. But they have said that those numbers are 10 times understated, as they only post the final settlement numbers. So if that is the case, you're talking trading 2.9 billion ounces of silver per day, unallocated, rehypothecated, 10 times the float, 3.5 times annual global mine supply. And in gold, it's about 2.5 times annual global mine supply, the amount of metal they have versus the paper, these unallocated, pooled, if you will, contracts. And what differentiates, I mean, look, there was just the LBMA, or the central bank of Europe, just came out. Where did I put that? I just read it. Here, listen to this. The ECB warns gold could undermine the region's financial system. The gold market may pose a threat to the financial stability of the Eurozone, especially in the context of geopolitical tensions. ECB experts identified risk factors, and here's what they're getting at, including high demand for physical gold. So give me the gold, I want it.
Yep.
The dominance of large traders, i.e. commercial banks, and insufficient transparency of transactions. So in essence, what you have are these banks that are trading massive amounts of non-transparent, naked short positions. And what's different is, I want the gold. No more, I trust the paper. Give it to me. That's what is very different. Remember what Vince Lancy and Luke Groman were saying? It's the government saying, I don't care. Give me the gold. I don't care that it's short. I don't care that this is an existential threat. Give it to me. But that's the attitude right now by the BRICS nations, by Russia, by Saudi Arabia, by India, by China. Give me the gold. And so much so that China, the second largest producer of gold and silver in the world, is flying all around South America buying doré and concentrate. So when you look at a system that is massively leveraged like this, massively rehypothecated, it presents what ultimately could be an existential threat. Some of these banks who are as silly as a mud wall, trying to be, naked short to this degree. So yes, that is what, in essence, when your exchange is T+1 day and it goes to T+8 weeks, and they cite a shortage of trucks, that is a default, more or less, or at least attempt to scurry and lie about why you can't deliver. Imagine if you had a company that needed gold and silver to produce something, and you expect it in 3 days moving in your way. Sorry, Adam, you're looking at 8 weeks because we don't have enough in the way of manpower and trucks. So this is almost a default, not outright, but you see more and more delivery. And that's what happens. These traders, these central banks and sovereign wealth funds will smell blood in the water, and they'll stand for delivery. And that's when the whole thing blows up. It's like Bernie Madoff's scheme. It was a great scheme until people said we need our money back, and then quickly unraveled.
The push for de-dollarization has become a fundamental objective of the BRICS alliance as it seeks to redefine the global financial order currently dominated by the US dollar. This ambition has intensified geopolitical tensions, exemplified by former President Donald Trump's threats to impose steep tariffs on BRICS members in response to their challenge to dollar supremacy. The bloc has actively explored establishing a common trade settlement currency and promoting the use of national currencies in bilateral trade, aiming to reduce dependency on the dollar and mitigate vulnerability to U.S. economic sanctions. As 2025 approaches, the BRICS face a critical juncture. They must either make decisive progress toward de-dollarization or risk allowing internal divisions and external pressures indefinitely derail their efforts. Brazil holds the BRICS rotating presidency and continues to advocate strongly for reducing reliance on the US dollar. However, With India poised to assume the presidency next year, the alliance's trajectory may shift. India has recently prioritized deepening its economic ties with the United States, advancing a trade agreement that lowers tariffs on American imports, and has expressed clear opposition to the bloc's de-dollarization initiatives. Andy points out that this evolving dynamic threatens the cohesion of the BRICS alliance on this issue. Without tangible advancements before India's leadership begins, the prospects for dislodging the dollar's global dominance through BRICS may dim significantly, underscoring the complex interplay of national interests that will shape the future of international currency dynamics.
You have a bunch of countries that used to be adversaries that are coming together to push back against the Western hegemony and the sanctions and the tariffs and all this stuff. And it's China, it's South Korea and Japan, and a bunch of these Asian nations in Southeast Asia, and they are uniting together. But here's where it gets really, really, really interesting. And let me pull up, see if I can find it. I don't know if I can or not. Well, I guess it doesn't matter. I'll just explain it anyway. So what happens is about 2 weeks ago, they came out with the renminbi cross-border payment system. And the renminbi cross-border payment system is Project Mbridge. They took it over. China did. And they announced that they had integrated 10 Asian nations and 5 Middle Eastern nations into the renminbi system, cross-border payment system. Again, the countries in Southeast Asia and Middle East. So they've integrated them. And this payment system settles not in the 3 to 5 days that SWIFT does, but in 7 seconds. And the SWIFT system and the dollar is not compatible with this bridge network. And you remember Saudi Arabia was a full participant in Project Mbridge before the rug got pulled by the BIS. But anyways, so you have this system that is free from SWIFT interference that settles in 7 seconds. And you have all of these countries that represent 38% of global GDP. Well, why did I mention that other stuff? I'll get to it in a moment about the other countries, the other groups. So you have a growing BRICS community where the 44th country to apply it is Vietnam. And so you have 44 countries that have applied, Vietnam being the last. Indonesia has already been accepted as a full member of BRICS. They have the largest nickel deposit in the world. So all of these things are relevant and big. But let's go back to the payment system. So you have just connected China with all of these nations. And then you get what's happening in July, the BRICS meeting, and the finance minister of Russia comes out and says something massive. And this is what isn't being talked about, because a lot of people will poo-poo the BRICS and say they're not big enough and they don't have enough pricing power, and the dollar and the bond market are the biggest in the world, and blah, blah, blah. Russian Finance Minister Lavrov just came out and said that this technology is priority number 1 for the BRICS meeting in July, that the integration of a new settlement system for BRICS nations. And he said, and I quote, that this new payment system will be open to non-BRICS nations as well. Now, let's put it in context of the Belt Road and the Shanghai Cooperation Organization and the Eurasian Economic Union and the 38% of the Asian nations and the Middle Eastern nations that make up 38% of global GDP as it is. You put all of these countries together, which would then be 3 of the 4 largest nuclear arsenals on the planet, the majority of all of the commodity production from soft to hard to precious, the majority of all the refining of rare earths, the majority of all of the manufacturing capability on the planet. You put it all together, and all of these nations will have access to this new cross-border payment system, which is operational and will be extended to those countries which are all united and closely aligned with the Chinese market. You now have the ability to flip the switch very quickly. And every one of these countries will have the ability to trade in local central bank digital currencies and settle in gold. And the last piece of the puzzle is the Shanghai Metals Exchange saying we're going to internationalize our endeavor and start building exchanges in other countries, starting in Hong Kong and Saudi Arabia. So you settle imbalances in gold. Well, the vaults will be all around the network, and they can settle directly in the Shanghai gold market with bars right then and there. So what I'm saying is that all of this placating of tariffs and meeting with President Trump and saying, yes, sir, that's great, you're the king. And then that's great. But behind the scenes, they're preparing for plan B. They are preparing for a world where the dollar and the treasury are not the preeminent and dominant settlement and reserve system. And you can see it if you look closely enough. But there's so many naysayers that the inability to see that the infrastructure is expanding. The very fact that they're allowing non-BRICS members to do this might be the biggest news that we've ever seen regarding the BRICS. No one's talking about it. We'll see if I'm right. I feel that I am. For Lavrov to say we're opening it to non-BRICS members, that doesn't mean the United States. That means, I think, all of these countries that are closely aligned with the BRICS in terms of what they're doing and trading permits within the BRICS zone, I think is something that could expand massively de-dollarization as the months continue.
The growing shift by central banks and institutional investors toward physical ownership of precious metals is set to impact global markets and prices significantly. As confidence in paper-based contracts and unallocated holdings declines, demand for tangible, deliverable assets intensifies, highlighting potential shortfalls between outstanding claims and actual physical supply. This imbalance is likely to create increased scarcity, driving prices higher and amplifying volatility, especially during economic or geopolitical uncertainty periods. The resulting pressure on settlement and custody systems may prompt a wider reassessment of risk management, with institutions favoring transparency and direct ownership of over-leveraged financial instruments. This trend could lead to stricter regulatory oversight and a fundamental restructuring of precious metals markets, reinforcing physical possession as a critical pillar for financial stability and wealth preservation in the evolving global economy. That's it for today. Share your thoughts on Andy's analysis in the comment section below. If you find this video informative, don't forget to support and turn on notifications to stay informed about our latest videos. See you in the next video. Thanks for watching.